Hey, this is Jim. It is 5:41 p.m. in San Francisco, California on July the 9th. I'm not a financial advisor and I never, ever provide financial advice. So I wanted to start, this is going to be a fairly long video. I want to cover all of the charts I've updated and posted onto the BAM membership site, and I want to cover Anemoi, different time frames, and then show you guys a couple things about the forecast moving forward. So a couple observations, especially having to do with volume and things like that at the 60-minute bar level. So first off, I want to show you, point something out to you guys, especially if you follow Elliott Wave. A lot of people may not know that Ralph Nelson Elliott, when he started and created the Elliott Wave theory, I think it was back in the late 30s, early 40s. He was using Dow Jones Industrial Average hourly closing price data. That's what he used exclusively to come up with his whole system. That's what we're using here as well on these black lines, right? It's closing price hourly bar data. And I did that for a really specific reason in the design phase, so that the people who do study Elliott Wave could sort of lean on this and get an idea of what Ralph Nelson was looking at back when he created the Elliott Wave theory. So if you take a look at this high that was posted throughout this whole bottoming period here, this high that was posted here printed a 1507 number. So whereas if you look at intraday bar, highest high intraday on that hourly print, we did not move above that. We did not probe a breakout on Friday. But if you look at using the system that he used, the methodology he used, we do move above that 1507 level on an hourly bar closing basis 2 different times. So clearly in an uptrend so far. Clearly with the Anemoi terminal price acting bullishly, and this violet, let me get rid of the weekly and monthly for you, and this violet trigger pulling back, moving into that daily trigger. So violet into blue, hourly trigger into daily trigger, and then moving up like that. Treat this exactly and view this exactly the same as you would if you're using the Anemoi terminal day trader chart, this chart here, and you're looking at this interaction between the 1 minute price bar and the 5 minutes. So that's a clear airplane. It's a deeper airplane, obviously, when the 1 minute trigger drifts below the 5 minute, and especially when price actually penetrates the 5 minute trigger like it did there. But really nice double bottom formation there. Really nice clear 1 minute velocity divergence. You can see the first price low, the second price low on the double bottom, and see how nicely this 1 minute velocity holds up there. Same thing with the 5 minute. Pretty clear cut signal that when price, if and when price moves back above that 5 minute trigger, it's a buy, and that the bot's going to go long as soon as that 1 minute trigger moves above the 5. So if you think in terms of that dynamic in an airplane, bullish airplane setup, it's the same thing you're seeing right here. And you can see how nicely that acted and where price resolved on Friday. Now that doesn't mean that price can't snap back toward the hourly trigger or even the daily trigger prior to filling this air pocket and moving up toward the weekly trigger and the monthly trigger. Weekly trigger for next week will be sitting at the $17.42 level all week long. Obviously, the monthly trigger will be at $19.99 for the entire month of July. So we know where that is. We know what the weekly trigger looks like next week. And then what we're hoping is that price moves up toward the weekly and hourly trigger, and then, as opposed to this hard rejection which we saw back in March, we're hoping that then we stabilize the weekly trigger. At that point, we are hoping, and I'm anticipating, will move back above the monthly trigger. So this gold trigger moving back above the monthly trigger and again, that will be a bigger picture version of an airplane, a very deep airplane, obviously, but all the same, as that weekly trigger resolves back above that monthly trigger and begins to trend, that's what we're hoping for. That's what the BAM models, future zones of strength, are predicting. So if the stock tracks, that's sort of what we have to look forward to. And at that point, it'll take multiple weeks or even a month. But at that point, we could be in a situation where these two lower triggers, the hourly trigger and the daily trigger, are also trending above the monthly trigger. At that point, if and when that happens, then we'll have that powerful bull market trending. I call it the trigger configuration, meaning that the monthly trigger is at the lowest point on this chart that you'll be looking at. The weekly trigger is above the monthly trigger. That blue daily trigger is above the weekly trigger, and the violet hourly trigger is above the daily trigger. So, that's what we want. Obviously, right here, this is a very bearish configuration from May 24th into the hole there, but we're looking for that to flip for us, and I think that will happen. Everything looks fine as far as the day trader chart. Whether or not we'll move down to 1397, I'd love to see that right out of the gate on Monday, because as I'll show you guys on the 1 minute chart and 5 minute chart in a minute here, I have really compelling looking area to buy the dip moving forward here, and especially if it moves down toward that 1390-ish level. I personally have been loading up intraday, fully margined on the long side and trading around my core holding in AMC. I also have bought, calls at certain times, like I told you guys. So that's what that looks like. Let me move now to the. Let's bounce to the. Let's go to the membership site first and take a look at this. We generated a new zone of strength. It's a little bit. I'm not all that confident about it, but it is July 22nd ish, somewhere around in there. It's was derived from my 15-minute model. That's why the green line is not as thick as these green lines. These are coming from all much bigger picture models, all the way up to the daily price bar, Fractal. Some at the 618 minutes, some 420, some 240s, the 120, and the 60 minutes. So that's why all of those are as thick as they are. And these are all really compelling looking zones of strength. Assuming we don't, that the stock does not take off and spike aggressively higher, we still have a configuration here and a setup, both in Anemoi and in BAM, that looks to me like we will look back weeks and months from now and see that a really nice low was put in and that the stock is trending. And so I do expect some violent upside spikes like we saw in March, and the model did predict that zone of strength, and like we started to see at some of these other points that turned into sort of false starts. But what I want to focus on in the bigger picture and even intermediate term is that I believe when we look back weeks and months from now that we'll see that this was the start of a really powerful uptrend, or at least a very consistent uptrend. So, I really, looking at everything I'm seeing right now, doesn't mean I have to be right, obviously. Doesn't mean the stock has to track the model. But everything I'm seeing looks to me like even if these guys are sitting on top of this stock and trying to hold it down, that we're still headed toward, 32 vibration and higher as we move into over the next couple months here. So we'll see again. We want to see how strongly we track right out of the gate. And assuming that we can move up above the monthly and weekly trigger, then we're in a position to where those can begin to form sort of the pullback supportive base of price as we move up toward 32 vibration, which is a really important vibration level. And then eventually attack these retest levels. I'm going to leave these positioned where they are right now into the first 2 weeks of August. That was a predicted zone of strength going back, many weeks or months prior to Adam Aaron's most recent tweet that had to do with this same time period here in August. So that's always a good sign. And I like the fact that we already had predicted zones of strength that were powerful. You see how thick those green lines are, and those, like I said, have been on the board for multiple weeks, having nothing to do with me knowing anything about Adam Aaron's tweet that he sent out this past week. So you guys can see we had this zone of strength the 24th through the 12th. This is the new zone of strength, sort of on the 22nd-ish, somewhere in there. So the important thing there is that now we have we're already lifting, right? We're technically in an uptrend, like I showed you in this chart, based on the higher hourly bar closing basis. So, we're in an uptrend off of that May low. And so not only were we already in that uptrend, but I'm sorry, you guys. I'm over here on this chart. Not only are we in this uptrend here off the May low and headed toward the most powerful zone of strength out here in the first 2 weeks of August, but now we have something to kind of fill in the blank here. So I added this extra price box here and scooted the 32 vibration level over into there, and then, we'll see. I have a feeling that even once we do fill this air pocket on the Anemoi terminal and spike up above the $20 mark, that we'll have to flop around a decent amount before we stage the next sustained rally leg up toward these other levels. It doesn't mean that the stock can't spike straight up to 32 and then come right back down to 20, or even spike up to 49.50 and come down to 20. It just means that it takes a while to sort of turn the ship when you're in the type of downtrend we've been in. And even though we've traded sideways for quite a while, I can just tell by the configuration of those Anemoi triggers that the smart conservative thing for me personally to do is to anticipate that we probably will have to spend some time flopping around in the 17 to 22 range before we stage a sustained rally leg up into these other zones of strength. So that's what that looks like, you guys. You can also see that I've updated the daily as well. A little tougher to see, but the big takeaway here is that we want to always keep in mind that this large expanding Megaphone melt-up fractal that was the formation that allowed me to be as bullish as I was into May and June of last year, and the same one that left behind this $90 pay me later level and the 133 pay me later level. That expanding Megaphone melt-up fractal is still in place. So if and when price trades back up toward the 65.60 retest level and then certainly above the old all-time high 72.72, is that what it is, you guys? 72.62, whatever it is, the old all-time high from early June, that would by default bring lift price up above this blue line, and then I have a note here, any price above the blue uptrend can trigger a melt up. So that's what that looks like. We sort of have this sitting up here, this note. Nothing changes here. You guys can see the trajectory of this black speed line. If the stock starts to really take off at any point this year, excuse me, you guys, then that is what I will be sort of focused on, is sort of the 500 and above number. Quick look at the weekly. And again, you can see a little clearer view here of this expanding Megaphone melt-up fractal. The 32 vibration level doesn't bring price up above that green re-entry line, gets it close. And if we get back above that spiking high, we're still not really there. It'll take a little bit more, but with just a little bit more effort, we re-enter that expanding Megaphone melt-up fractal, and then On this time frame, we've got this speed line sitting there at the $100 level. That sort of makes sense if we take off, because just psychologically, large numbers like that tend to create some hesitation at least. And we also have that $90 and 133 pay me later level that tend to create a little bit of hesitation. Here's what the monthly looks like. You guys know, we have different pay me later levels based on different fractal time frames, but in general, we've got a pay me later at 90, we've got one at 95, we've got one at 133. So, all of those pay me later levels are sitting somewhere between $90 and 133. So, good news. That also, you can see the speed line on this particular fractal that carries price up above the $100 mark into over the next half of the year here for 2022. So that's what that looks like. Hang on a second, you guys. Here's a look at the 60-minute chart that I want to show you guys. A couple things about this chart that I want to point out. So when I talk in terms of a sort of a trampoline, and I talk in terms of a buy signal, and I tell you guys, coming into a session that there are buy signals waiting under the market that are supportive, or I talk in terms of a relentless uptrend. What I'm talking about is that in my work, in the proprietary technical indicators that I created that give me these buy and sell signals that you guys have seen work. Once those buy and sell signals trigger, and I don't know ahead of time what price level that the stock needs to move to, or the index, commodity, whatever it is. I don't know what price level it will need to move to in real time in order to trigger my trampoline buy. But once it happens, it leaves behind some really important information. And the information that the most recent buy signals have left behind is that they sync up perfectly with this green uptrend line. So at this point in time, back in May, and those two touch points in May, I still couldn't tell whether or not that trend line, right? And so you can see the move up, the move down, and a higher high. So technically this, was the point of origin for a trend line. You guys have seen trend lines fail often. Sometimes they work, sometimes they don't. The point is, as soon as I see that my trampoline / buy signals are syncing up with the trend line, it's a really good sign. So it basically then allows me to actually know what price level to step in at, as opposed to having to wait for a real-time buy trigger based on my proprietary technical indicators. So point is, if you guys want to create this trend line, and even if price were to penetrate that, I don't believe it will, but even if price were to penetrate that at some point this week, it is a strong buy per everything I look at. We happen to have the advantage of the Anemoi terminal now as well, and so we know that the hourly trigger and daily trigger are sitting under price right now, so those also provide sort of a bogey to buy the dip against the backdrop of rising velocity, right? So it's not an automatic buy in the Anemoi terminal if velocity doesn't agree that it's supportive. But in this case, we've got the wind at our back as far as velocity at the hourly and daily level. In the Anemoi terminal, we have this green uptrend line that I know has been and will continue to be associated with the trampoline buy signals in BAM, and so it's a really nice setup for a high confidence call that we have formed a low and that the stock wants to advance for the rest of the year, in my work at least. So the other thing that's important to look at is the volume characteristics. We know that we had higher nesting volume during this advance leg right here. So if you look at this nice advance, and you look at these higher nesting bars, not the spike bars to the upside, but this nesting volume down here is at a much higher level than the nesting has been in the past here and here and here. So that's also a good sign. There's more support, there's more buying activity coming in on within an uptrend. So that's a very good sign, as opposed to just buying volume coming in when you're trading right, back down against a series of lows. So that's really encouraging to my eye. I have a new note here: volume breakouts inevitable fairly soon, most likely July 12th or prior. So we started to have the spiky breakouts. I believe we'll probably and especially now that we have this new data with the zone of strength into 722-ish, I think we can start a sustained increase in volume, where we'll again see high volume posted at the hourly level on the spikes to the upside, and then also continue to build higher volume on the nesting volume during the pullbacks and consolidation, which is what you want to see. That's what builds that really nice support level, and all support is demand. So the other thing to remember, you guys, is I've seen a lot of misinformation on Twitter and YouTube, various YouTube channels, where people are talking about volume. You have to remember, what's going on behind the scenes, and first of all, we have to assume that we're talking about a market that is fairly real. Right? We know there's some stuff that goes on that's fake, but for the most part, the market is still fairly real, and we should be able to count on the fact that when we see some volume, at least volume trends, that it's, we can rely on it to a degree. Maybe not to the degree we could rely on it decades ago, but we can still rely on it to a degree. So keep in mind that, if you have 1 million shares worth of demand, so someone wants to buy 1 million shares of a stock, if there's another person that's willing to sell 1 million shares of the stock, then the fact that 1 million share transaction might seem high, even relative to the stock's history. If the buyers and sellers are matched up, the supply and demand, the price doesn't move, it doesn't go anywhere. So just staring at volume increases and things like that doesn't tell you the whole story. Conversely, if someone wants to buy 1 million shares of a stock, there's a 1 million share demand, and no one wants to sell, that stock could move to $1,000 in one tick. Whereas when supply and demand are balanced, even at 1 million shares or 10 million shares, the stock could trade, at $14.60, not move. So just keep that in mind, and know that there's a little more to it than just blindly assuming that as soon as volume picks up, the stock is going to move to $100. It doesn't work that way. The backdrop's always a little different. The supply and demand is always a little bit different. Hopefully what we'll see in this whole AMC movement is more and more outsiders coming in and increasing the demand. If that's the case, then we can really sort of trap some people, and we can really see more panic in the buying side of the whole equation. So again, as we look at this, we know our main bogey here is the Anemoi weekly trigger and the monthly trigger, so 1742 and 1999. We know we've got a $24.60 retest level sitting overhead. The beautiful thing about that setup is it's more similar to the May-June setup, where we have a retest level that's above both of these important triggers, but not so far out of range that it's unrealistic to see price break a couple triggers and then attack something like a 52 or a 65.60 retest. A 24.60, a spike through these two triggers on acceleration and a spike to the 24.60 retest level is very likely, normal, and would make sense. So If you think about what I talked about at the beginning of the video, that I didn't think that the stock was ready to run in a continuous uptrend through the $20 level based on the Anemoi trigger setups. This makes sense as far as a spike toward 2460, and then maybe a cooling off period back toward these the 17 to $21 level, $17 to $20 level, and a cooling off to allow those triggers to start to rise more aggressively and push price higher, as opposed to the current velocity and trigger configuration where the velocity wants to pull price right back down, snap back to the $17 to $20 level again, even once price moves above it. So keep that in mind. Interesting bogey there. I'll show you guys the 5 minute, 1 minute, and I'll just wrap this up. Here's the 5 minute. We were able to pick off a few more upside price targets this week as we tracked up into the zone of strength. Notably, this vibration level at the 1520 level, that was the D wave. So now we know price moved above it, so that was the D, and it's in the E. I've marked it okay because we don't really care where it goes. It can turn around right here and break out, or it could move down toward our hourly trigger, toward even the 1380 vibration level, and it would still be classified as a healthy setup and just a pullback, cooling off within an uptrend. So again, that 1520 has been taken care of. You guys see this note here? I'm going to leave this on the board during this week. Any re-entry above this yellow line, so far what's happened is we did a bull crawl. We can come all the way back down to this low that we made on June 23rd, and you can see where price moved up, rattled around, broke down, and then started to race back up again. So typical bull crawl, I might have said bear crawl, bull crawl, back up to tap underneath side of this trend line. Price bumps its head on it, also coincident with that 1520 D wave to take care of that. And then again, if price can accelerate up above that yellow trend line, then it can run through all of these levels and attack this speed line. That could happen on that could happen on Monday or Tuesday based on this setup and the zones of strength into Tuesday the 12th. If it does, then again, it's like what I showed you guys on that other chart. More than likely, based on history and based on the way the Anemoi terminal looks on that 6-month chart, price would snap right back down again. And then we also know that these retest levels, as they're hit, and they're 1680, 1853, 1960, 2295, and 2435, as they're hit, they become vibration. So that can create a tremendous amount of noise just to try to move through the ABCDE vibration sequence once those retests are hit. So, again, all of this stuff is saying the same thing, which is that even if price tracks aggressively to the upside and cascades through the weekly and monthly triggers, that there's a bunch of wildness, noisiness, big broad range, and probably ends up back at the $17 to $20 level prior to the next big run to the upside. But that's what that looks like in case we do take off. The 1 minute, quick look at the 1 minute. What's interesting about the 1 minute is that this small degree uptrend here, marked in this this thick yellow line, would allow price to move down toward the hourly trigger or even the daily trigger and catch nice price support. This also is associated with a sort of trampoline buy signal sitting underneath the 1 minute model. And so that's interesting as well. And again, if they want to sell this stock off on Monday morning, I'll be I'll be buying it with both hands with my extra margin. Of course, I have to be flat out of that by the end of this session, but that's what I do, and I just trade around my core. The other thing I want to show you guys is if you go all the way back to this point of origin low on July the 6th rather, and you see this small degree speed line that was drawn off of these 2 points, small degree uptrend. You see this dropout right here, and then the dropout's followed by a bull crawl, right? And then as soon as it breaks back and has re-entry, this is, it's a very small degree expanding megaphone melt-up fractal, and it doesn't have a real wide megaphone. Obviously, the speed line trajectory is not very steep to the upside, but price does follow the observations that I made going all the way back to the 1920s into the high and the crash in '87, everything else, which is that when price re-enters an expanding megaphone melt-up fractal, human emotion wants to carry price to attack the speed line. This is unnatural. Usually it attacks, very quickly. If you wanted to break this down and look at a pay me later level right here, you'd see the pay me later level was hit right here. Again, it misses here, then it hits here. So anyway, this is sort of unnatural to crawl up a speed line, but we have people trying to hold this, suppress this stock price, and so that's why that looks like that. But again, just focus to gain confidence in these setups. Focus on some of the small degree nuances that you see, or the nuances on a small degree fractal, so that you can see these things happen over and over and over again. You'll be able to, long after I'm gone, you guys will be able to use these on any price chart, any time frame, down to 25 tick, 15 second, 30 second, all the way up to the monthly level. I don't care if it's a stock, an ETF, an index, a leveraged ETF, commodity, currency, crypto. Human nature is human nature, and manipulation aside, which only happens in certain spots, you'll see this stuff work over and over and over again, and it can help you, I think, become pretty successful. So this is what this looks like, you guys. We've got, obviously, the 1 minute bullish count continues above that 531 high. We've got the 1640 pay me later level. We've got the weekly trigger up here. I mean, this is a clear, in my work, a clear buy the dip, if we have one, on Monday and Tuesday, or Monday or Tuesday at any point. It's a buy the dip. I especially would love to see them hit it Monday morning, like I said, and then the model is expecting us to break out above that 16 and change level. Once that happens, then it'll complete this topping count at the 1 minute fractal level, and all that means is once you've completed a topping count, is then it goes through my bottoming count. So it just goes through my count to the downside, and then starts another bull count to the upside, and this just happens over and over and over again at these different fractal levels. The 1 minute model could go through a topping count, a bottoming count, another topping count, another bottoming count. It could cycle 5 times, all within a single topping count at the 5 minute fractal level. And then as the 5 runs through different up and down counts, 5 of those or 2 of those or whatever could also be unfolding inside of a single topping count within the 60-minute fractal. So they're all nesting, all doing their thing. It's real similar to Elliott wave, but I just have a completely different approach. If you're interested, my topping count is not the same as, but it would be closer to a Tom DeMark sequential. And same thing with my bottoming count, meaning that he and I both have a trigger that has to be met. And then once the trigger's met, you're counting sequential higher highs through your end of your count, and my number's proprietary number. And the same thing, you hit your trigger on the downside, and then you count through the proprietary count to the downside. So if you guys aren't familiar with Tom DeMark, he's sort of a titan in technical analysis world, has been for decades, and you can go kind of check out some of his work. So that's it, you guys. I will be leaving San Francisco late Monday night. I'll be in a different state. May or may not mention where I'm going. Not certain, but I'll continue to keep up with the forecasts. I have ways to take basically everything with me. And even if everything blows up, I can carry everything I need on a memory stick and just go buy new systems wherever I end up landing. So anyway, that's what we'll do. You guys, good luck. Have a great weekend. Hope you're enjoying the summer so far, and we'll continue to enjoy the summer and have some fun. As I said, a week or two ago, it's the exact opposite setup of last year. So the message is the same. Go enjoy the summer with your friends and family. Don't worry about the AMC stock unless you want to actively day trade it. But it should be uptrending the entire summer as opposed to downtrending the entire summer last year. All right, good luck, you guys.